Hello and welcome to my channel. Today I'm going to talk about the geographical bias which causes investors to lose money. Geographical bias is when a particular location or region has a big influence on an investment decision. Example, US investors may want to only spend in US stock market and Indian investors may want to invest only in Indian equities. Investors biased to invest in their home country may miss out on the potential for high returns in other countries. The global market has become well integrated and technology has built global bridges. Global information is accessible, but somehow investors find it hard to cross the geographical bias bridge. And in the current low market return environment, this incapability to cross that bridge of bias can hurt investors in multiple ways. First, by limiting investments to a certain region or industry, investors may be taking on more risk than they realize. As an example, US markets continue to stagnate or if they fall and emerging markets play catch up, a pure US equity portfolio might turn out to be more risky than a portfolio with US and emerging markets portfolio exposure. Second, it is hard to say how much returns on average investor loses because of geographical bias, but research has shown that investors who have a home bias may miss out on potential returns by not diversifying their investments internationally. According to a recent study made by Vanguard, a US investor who invested only in US companies would have earned an annualized return of 9.5% between 1970 and 2019, whereas an investor who invested globally would have earned an annualized return of 2% more at 11.5%. Third, inflation is a reality, and alternatives like commodities are important asset classes for an investor to not only understand but own. There are many ways to take exposure to commodities. Investors should actively work to overcome this bias, seek out investment opportunities in different regions and asset classes. This will not only assist in reducing overall risk, but also enhance returns in a low return times in the slowdowns that we are now. Investors should seek professional assistance and ask their advisors about more research on effect of geographical biases on long-term wealth.